And first off, we need some theme music here at orangequant.com. In the Hall of the Mountain King. Give you a few seconds of that. Get your juices flowing. And I'm Dennis Hudson, your host here at orangequant.com. And don't throw rocks at me. It was the fault of H2O5, really, folks, all week long. Let me tell you, folks, this is the kind of action, exactly the kind of action that separates the grown-ups from the chickens. After a long string of successes, H2O5 this week on the daily charts, not this weekly chart we're looking at, but on the daily charts, it finally handed us a resounding defeat, as the inflection was called for on Tuesday and didn't happen Tuesday, Wednesday, Thursday, or Friday. The S&P just kept climbing. The bright side of it was, it does not, even now, it doesn't look to me like it was what we call a DMC, a deadly Momo change. I think, as I explained earlier, the excuse that I made, it was because, well, you can kind of see it on this chart, when you have to draw long trend lines from way, way back, just the slightest error in alignment can move a date on a daily chart by several days, on a weekly chart by as much as a week or two. Now, I've made my excuse and apologies to anybody. And but as I say, it was a long string of successes, and I suppose I should expect to take one in the teeth every now and then. However, if you are still holding a short position on the SPY, that is the spiders for the S&P 500 ETF, I think this coming week could be your week, according again to H2O5, which is typically right. So if you're still holding short, Santa Claus may come to town this week, January 11th, just for you. Now be careful here. Look back at your own trading history, and you'll see that the times when you dumped a strategy were exactly the times when you got creamed. For example, right now, all my inner instincts, based on just plain ordinary technical analysis, tell me that this looks like a continuation pattern and that it's going to continue up. But, as I say, the H2O5 is rarely wrong, and what we have is a major inflection, and I'm going to draw it for you right here. Major inflection that was this week on the weekly chart. Okay. And, okay, I got a little confused here on my controls. I'm not sure that I recorded that, what I just said. But my point is, changing strategy. I look at this and from all my technical analysis background, it looks like a continuation pattern to me, that it will continue up. However, we do have a major inflection here on H2O5, which is rarely mistaken. And that is right here. You see it right there. That was this past week. And that means a reversal is coming this week. So I'm sticking to my guns. Short position on the SPY. And I'm even more encouraged in this because that intersect of these trend lines here is at the moneymaker. And that kind of creates a double, triple, quadruple witching type of situation. And I really do expect that now we get some downward action on the SPY, or S&P 500. And boy, do we deserve it. And then we have another major inflection on this weekly chart out at the 25th of January, and then another one out at February 15th. The 25th looks a good bit stronger than the week of the 15th, because the week of the 25th is, like this coming week, at the moneymaker. Now, on the bad side, there is, and I don't actually show it here, but I'll try and draw it in for you. There is a tau iota price series resistance that it did crack through, that was at 1143, right about there, and it just kind of barely went through that up to 1147. But that is a danger signal that it could continue upward. But my theory of the case is that it needs to recover from doing that. There's probably going to be the correction coming this week. It may last for a couple weeks, but it is coming, I believe. Besides that, if you haven't noticed, folks are getting really nervous in the market. Kind of bearish sentiment out there. Some of the news is making people jumpy as chickens in a cat house, for crying out loud. So you never know what folks are going to do. And it's widely agreed that this is nothing but a house of cards. But we thought that last year in March and April and May and June, as the market continued to climb. And of course, it's following a really nice channel here. I mean, if we want to get back to some basic technicals, we got a nice channel that has formed from long ago and far away. It looks kind of like that. But as I said, I'm sticking to my guns. My plan is short the SPY. Of course, I said that last March, and they killed me from March to June when I finally woke up and gave up the shorting stuff. But that was before I had H205. So, all right, to wrap up this week, January 11th, we're looking for a reversal. And then on the 25th, a reversal. A reversal from whatever is going on by the 25th. And then another inflection at the week of February 15th. This is not a daily chart. And you may have noticed we did not raise the price of the FLIR 2 ebook to $39.95. We took it only to $29.95 for a short time. And that's available below. One more little note. When you see the action this week, if it's above the high of last week, anything like that, you probably want to clear your short position at that time if you have one. Of course, I don't believe that's going to happen, so I think we're going to see something down like this, maybe to, I did have a synthetic up here a while ago. I'm thinking this week it could drop, down maybe to as low as 1100. So my plan will be to try and catch something that's up here towards last week's high if I can, as long as this lower end hasn't yet occurred, and then just ride it on down during the week. Okay, friends, thanks for stopping by. That's all the news that's fit to print. Let's get back and have the last few seconds of our theme song, In the Hall of the Mountain King.